And good morning once again, options traders. Well, good question for the group. It's about marginal pricing. And the question that I have is, where did all the money go? And what I'm talking about is whenever you see these massive drops in the index or in a particular stock, and you'll see headlines that will say something like $10 billion wiped out in a day. And the question is, if that's true, where did the money go? So let's go find out. And before we do, as always, please be sure to click like and subscribe. It's very much appreciated and definitely helps to promote the channel. So as I was mentioning, these are some of the headlines that pop up recently. Look at this. More than 7 trillion has been wiped out from the stock market this year. That came out in May of 2022. Here's another one. Amazon stock erases 210 billion in one day after inflation triggers surprise loss and ugly sell-off. Now that headline is talking about this date right here. This was April 29th. We went from this level down to here, and they're saying that $210 billion worth of Amazon's market cap just got wiped out, as if it just vanished, was hiding under a mattress somewhere. Well, where did it go? And it's a very sensationalized headline, but it really misses the point. Well, the truth is it didn't go anywhere because it was never really there to begin with. Now, you might be thinking, well, how is that possible? Well, let's take a look at an example. Let's say that you have a piece of artwork, and I say one day, I'm willing to pay you $10,000 for it. And then the next day I say, you know what? I'm only willing to pay $8,000 for it. Well, the question is, where did the $2,000 go? Is it suddenly hiding under your mattress or sitting in a closet or in a bank somewhere? Did I siphon it off from somewhere? No, it's just a difference in perception. It's just a reduction in what people are willing to pay, in this case for the artwork, but in the case of the stock market, what are they willing to pay for a share of stock? So the thing you have to realize that with stock prices, that it is the marginal traders who determine the prices. And I've talked about that before in a previous video on the marginal pairs. But for instance, let's say that the stock is trading for 100 and there are 1 million shares outstanding. That gives us, of course, 100 million market cap. That's just the current price times the number of shares. Well, here's the thing. Is that really true? Is this company really worth 100 million bucks? Well, think about this. What if everybody went to sell their shares right now? Well, that price is not going to be 100. It's just like I talked about with a piece of art. Yes, right now, the marginal traders, the people who are trading right now, are agreeing to buy and sell at 100. But that doesn't mean that every single person in the world who owns shares can do so at that price. So to continue the example, let's say that 1,000 shares trade today. So that would be 0.1% of the shares. And the stock price closes at 95. So there's now a $5 drop in the price, or a 5% drop. Is it really fair to say that the company's value dropped by $5 million just because we would say there's 1 million shares outstanding that all lost $5 worth of value? So once again, it's really a sensationalized way to be an attention-grabbing headline. And you can certainly understand why the journalists do that, but that's not really what happened. Remember, it is the marginal traders who determine the price. So in a similar way, think about it like with banking. If the bank says we have so many dollars in assets, if everybody goes and withdraws that money at the same time, the bank's going to go into default. The money is not really there. It's a fractional reserve banking system. And so in a way, you can't go and get the money because it's not actually there. And that's how it is with the stock market. On any given day, we don't have the entire float or every single share outstanding that's traded. Relatively speaking, it's a small number of shares. And that's who's determining the current market price. So for whoever shows up for auction, buyers and sellers, they agree to buy and sell at a certain price. And of course, yes, that changes pretty much every second of the day. But at any moment in time, they are just trying to balance the buyers and sellers. But that again doesn't mean that every single person who wanted to sell at that price can do so. So for example, over an E-Trade's platform, I grabbed a screenshot today, and you have to do it while the market is open. Otherwise, most of these go to zero. But take a look at this. Now think about the market cap of Amazon. But look at where the quote is coming from. 100 shares. That's what a size of one means. One round lot of 100 shares. that are being bid for at 126.55. And we have 2 lots or 200 shares that are being offered at 126.56. So there's a 1 cent spread. We're going from 55 to 56. But we drop down one more row, the next highest bidder, 400 shares. We have the same bid, but we've got 126.57 on the asking price. We drop down another row. We go to 126.54. Look at this. Now we've got 1,300 shares at 126.36. You drop down one more row, you've got 100 shares at 123.45. So think about that. That's just 5 rows down, or if we add all of these numbers up, that's 2,000 shares. 2,000 shares out of all of the shares outstanding on Amazon, and it's already knocked the price down, or at least theoretically would, to just over 123. So that's why it's wrong when they say that the stock price dropped by a certain number of dollars and all of this value just somehow got erased. It didn't, because that would be assuming that everybody who wanted to sell at that previous price, or at any given price for that matter, could do so, and they simply can't. It's just a handful of traders that are creating the bids and offers right here, and then so the sensational headlines are saying, let's multiply it out by every single share outstanding, and then look at the difference and say that somehow that money is missing. So the point that I was really trying to bring up here is that you have to be careful when there is a panic. Remember, it's the marginal traders. And if you don't remember that video, it's on the marginal pairs. There's 4 pairs of traders who really determine the price at any given time. It's those marginal traders who determine price. And so even though, yes, you might be in a panic situation because you see that $210 billion of value just got erased, that's not really true. And prices can come back just as quickly as they fell. And that's because the amount of missing money in the market cap really isn't missing. And so the main thing to remember, as I always mention to traders, trade the market, but hedge your opinion. Don't get lured into these sensationalized headlines that make it sound like the stock or the entire world is coming unraveled just because they're quoting these big numbers. That money was never there. It's just an illusion, and they're done to really to create panic and to make the headlines look more sensational than they really are. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.